Welcome back to Street Smart. Investment advisor and portfolio manager Marc Faber has made some very big, accurate calls in the past. Earlier, I asked him where he thinks the global economy and markets will be 1 year from now.
I think within 1 year, the Chinese economy will perform poorly. In other words, that will have a recession.
A recession in China?
Yes. Whereby, a recession in China could be a technical recession. If you go and slow down from a growth rate of, say, 10% to a growth rate of 3%, there is a recession.
Right.
And also, I don't believe in the growth figures that China publishes, because if you had adjusted nominal GDP for the true rate of inflation, then real growth is, of course, much slower. But, I want to tell you something that disturbs me in all emerging economies and in many other developed economies. For my taste, in front of luxury hotels, there are far too many Ferraris, Maseratis, Bentleys.
Sign of the peak,
that is
or
not
what?
a good sign. You should see depression when conditions are depressed. I see a boom everywhere.
A boom everywhere.
Yeah, except for the working class and except for the lower middle class. But among the well-to-do people, the wealth that is floating around and the prices you pay for high-end properties is incredible. And I think that will come to an end, and a lot of people will lose a lot of money. And so I'm ultra careful at the present time.
It's interesting in your report, you talk about, I'm going to read right from it, Americans have been watching protests against oppressive regimes that concentrate massive wealth in the hands of an elite few, yet in our own democracy, 1% of the people take nearly a quarter of the nation's income, and in inequality, even the wealthy will come to regret. So you're saying we're watching everything that's happening in the Middle East, yet it's right here.
Yeah, I was the other day in La Jolla and Newport Beach, Laguna Beach, and you see, I was in front of a restaurant smoking. I'd never seen so many Ferraris and Maseratis and Bentleys and, fancy cars anywhere in the world.
Right.
And this is in America. I'm not saying this is wrong. I'm not here a social observer. But I'm just saying, basically, there is an opulence among a group of people that is huge.
A small group of people.
Very small, not even 1%. There's lots of people that are struggling. And I think that gives me a bad feeling, because I've seen so many emerging economies when they were in boom conditions. That was the time to get out. And we had a huge run in asset prices, from the lows in March 2009 until recently. I don't think they'll continue to go up a lot. I rather think that QE2 will come to an end, that we'll have a correction, and then we'll have more money printing, but it may not help the economy at all.
I hate to bring it up, but
Yes.
I want to bring it up with you in terms of the fiscal position here in the United States.
Yes,
You've been very
catastrophe.
vocal. It's a catastrophe. It seems like everybody comes on and says nothing's going to be fixed here, but it's going to have to be fixed, and ultimately something's going to...
Ultimately, it will be fixed when you have a crisis.
But what is that crisis? David Stockman was on with us this week, and he
Yes.
said we need maybe a financial 9/11 to make the folks in Washington come together in terms of dealing with our deficit and our debt ceiling and getting spending and taxes. Is that what we need?
Well, I think it will be worse. I think what will happen is that these deficits will stay very high, and that they will lead to very high inflation rates. Most likely hyperinflation, not tomorrow, but over time. All I can say is, as you said, I travel a lot, and I am surprised that the US can publish a consumer price index that is, say, 2%, when everything I see is up significantly in price, not a little bit, significantly. And so I think here the rate of inflation has to be closer between 5 and 10%, and in my opinion, closer to 10% and 5%. And elsewhere, I also see prices going up substantially. And so the potential for high inflation is actually there. Because look, if the US goes into recession, what will happen to tax revenues? They'll collapse. They'll collapse.
Again.
Then the deficit goes up automatically, and that has to be financed with money printing. So Mr. Bernanke will be very busy.
Right. I love talking to you, but you say things like, if the U.S. goes back into recession. Are you betting that it is? Is it a 60% chance?
Well, for sure, the economy right now is slowing down. Although when you walk on the street in New York City, it's like a boom town.
Right.
But In manufacturing, it's definitely slowing down. And employment is unlikely to pick up substantially because who wants to hire people with so many regulations?
It is picking up.
Yeah,
it
a
is
little
better.
bit.
A lot
yeah.
of the statistics are better.
Yes, but you have to see also what kind of jobs are picking up. Low-paying jobs and so forth, and temporary employment. But I agree with you. But part of it is if you lower the value of your currency and you inject trillions of dollars into the economy through money printing, then that drops, these dollar bills drop, and then they stimulate the economy for a while, but not permanently.
One last quick question. So a safe haven in terms of an investment, is it that depressed real estate? Is that what you say people should do, or what?
I think it won't move up, but it's not something that will collapse by another 99%. Tech stocks, as you know, some of them
can't go much further down.
They went down 90%. I think real estate isn't going to go down a lot. I think that in Asia you can still buy a portfolio of equities that would give you a dividend yield of, say, around 5%. I think they'll go down, but at least you have the 5% cash flow with which you can invest. And I think that fixed interest securities, a lot of corporate bonds and treasuries near term for the next 3